a lot going on with India at the moment. It's fascinating to see. We have a new central bank governor. We have his first meeting in that position this week. We've got inflation skyrocketing. I mean, when you look at food prices up by almost 20% this last month, general inflation higher, more than 6%. You've got the rupee all over the place. I mean, it's recovered a bit.
Yeah,
how am I supposed to think about India at the moment?
And also, you've left out that the main opposition party has just announced who they want as their prime ministerial candidate for the upcoming elections as well. So political turmoil which impacts the economy. I think with India, the story has always been, if you're looking at a 3 to 5 year outlook on a rolling cycle, you're always fine. If you're trying to time it from a 6-month to 12-month perspective, you're going to hear lots of stories about growth and how it's bounding up the economic tables, but you're going to end up in the short term always disappointed for the simple reason that you do have problems of inflation. You have those growing problems that any economy which is emerging like this has, and of course growth has fallen from around the 9% target a couple of years ago down to just below 5% actually now, and that's hurting the corporate sector. But as you say, what's hurting the mass population? I just got back from there last week. What's hurting the people in the villages, and it's the villages that I was visiting in places like the Punjab. What's hurting them is food inflation, as you rightly say, and that's where India lives, in its villages, not in its big cities.
So what does the government and what do central bankers do now? I mean, they can't raise rates. Because the growth is so shallow. So how do you
with a country like India, you can't just use the conventional policies that we're used to in the West, partly because the lack of infrastructure means that simply raising interest rates won't really impact people in the villages who are impacted, the 800 million who live in those villages of the 1.2 billion, because what it'll do is won't touch them at all. They don't have mortgages. They can't increase their savings rates, and food is inelastic. You're going to have to eat. And so what the government needs to do is more supply-side solutions. They need to make production of food more efficient. They need to reduce wastage of food. And thereby, they can reduce the subsidies which they're providing for food and for energy. And by reducing those subsidies, they reduce the budget deficit as well. They really need to focus on the supply side. And raising interest rates is very much a demand-side solution to a problem which isn't demand-led. That's not what's causing food prices to rise.
To what extent are the people in India, the economists and so forth, blaming the Fed for this? Saying you're creating an inflationary bubble here, you're sort of oblivious and pretending that there's no implication. I mean, they almost say there's no implication of what we do in emerging markets. Is there a sense of blame? Is there a sense of thinking they're responsible?
The funny thing about Indian politics, and actually Indian economics, it tends to be incredibly insular. And so the blame tends to be very domestic. So whilst you're right to say the tapering from the Fed has what's impacted the rupee, in actual fact, the blame game that's going on is that there's a lack of confidence in the government. There's a budget deficit, albeit it's only under 5% of GDP, so it's not monumental by any means. There's a current account deficit, which to some extent isn't the fault of the government, because it's been the demand for gold. We Indians are obsessed with gold, and as we've imported that's impacted the current account deficit, and also the oil, the demand for oil. And so what's been blamed is actually the lack of confidence in the present government. And everybody I speak to, from the farmers to the economists, they're now got to a stage which you have in many democracies, which is they just want to change, and they feel that will reinvigorate. There's nothing wrong with people knowing what to do. It's actually the energy and the vitality with which, and the confidence that comes from doing it with a gusto, and it feels like a new government would bring that.
Is India a buy now, given that we have seen pullback, especially in the rupee, for an example, and what's the horizon? What's the investment horizon?
I think with India it's a classic buy on dip story, because you know which way the trajectory of the country has been going for about the last 10 decades, and actually last 10 years, and 20 years since liberalization. So it's a buy on dip story, but you buy it for 3 to 5 year horizons. If you're trying to pick the right moment for the next 6 months or 12 months, you're just always going to get your fingers burnt. And that's what constantly happens, which is one of the reasons why the short-term capital inflows have had their fingers burnt, the short-term investors into India, whereas the longer-term, the venture capitalists and the private equity groups who've held on for 5 to 7 year horizons have always done well, because over that you iron out those ups and downs which you're necessarily going to get. So with India it's buy on dips and buy for the longer term, but you're being too much of a speculator if you're buying just for a 6 to 12 month horizon.
Alpesh, thank you very much. We'll get you back in again to talk about some of your UK stock picks I know that you have as well. We'll do that another time. Alpesh Patel, principal from Profinian Group. Coming up here on Closing Bell, we've just been focusing on India a second ago. What about the rest of the emerging market space? Our next guest is warning of renewed concerns for